Let's talk markets and investing, making money in this market. Should you be concerned about the optimism in the markets? A new survey of investor sentiment showed a rise in confidence, but to some, this is actually a contrarian indicator. Let's get into what it all means. Joining me right now with their take on where this market heads next is Chase Wealth Management's Anthony Chan, and back with us, Fusion Analytics' Josh Brown, and Portfolio Asset Management's Lee Munson. Good to see you guys. Thank you so much for joining us. Anthony Chan, let's talk economics for a second. What are you expecting in terms of catalysts for this economy going into the election?
Well, I think that right now we have an economy that seems to be making some headway, some progress. Employment is starting to pick up. But make no mistake about it, we still have an economy that's growing below 2%. So it's an encouraging sign, but at the same time, it's too early to bring the marching band.
So do you think that since it really hasn't changed very much in terms of economic growth, that in terms of the economic story, is this market trading on something else?
Yeah, I think the market is still trading on a lot of hope. Hope that somehow policymakers around the world are going to do the right thing and they're going to encourage the economy and perhaps give it a little bit of a boost. Keep in mind that these policymakers are ready to act. If they don't act, it's not because there's been a reversal in policy, but it's because the economy has gotten better, and that's encouraging.
Yeah, Lee, what do you expect? Do you think the Fed acts in September?
You know, I was really hoping the Fed is going to act. The big problem is when you look at break-even spreads, we need those below, say, at 2%. What that means for people out there is that if we have too much inflation expectation, they may not do it as I was crossing my fingers and hoping. But if you look at 30-year treasuries, we're up 0.5% yield in the last month, and I would say that is because we expect to have better nominal GDP than we thought before. So I don't think we need the Fed to have that put as much as we did a couple weeks ago when, you know, we're betting on that lotto ticket.
Josh, where are you on this?
I think, unfortunately, we're all forced to engage in a little bit of game theory. You know, you've got the fiscal cliff thing that everyone knows about, so it's not important about the details with what's involved. It's more important to figure out how you think the market is going to act when we get closer. You could say the same thing for the German parliament voting on whether or not the Euro stability mechanism is constitutional. That's not going to happen before September 12th. So really, there's so much news, so many headlines, yet the market is dead quiet. And what that's telling you is we're just not ready yet to play the game and figure out what everyone else is doing. And so in the absence of that, what you're seeing is what we call flows over fundamentals. As your first guest from Chase pointed out, the economic data is going nowhere. We had a pretty lackluster earnings season, specifically on the top line. However, the flows are trumping that. You saw that 10-year yield with a little bit of a blow off top. Money's coming into stocks regardless. How long that can continue, I'm not 100% sure, of course.
So
but that's really what we're seeing.
Is this the summer slowdown and sort of the dog days of August, or is this just uncertainty about the election? This is not changing until November.
There's a misnomer about August. People think that it tends to be a quiet month, especially in terms of volatility. In fact, it's not. The quietest month of the year, volatility-wise, is usually December. So
feels
August,
like this is it now.
And think about last August. It was a tempest.
Well, we had the debt ceiling.
August
We had
1st.
the debt ceiling debate.
Right. So, you know, August doesn't necessarily have to be slow and quiet. It just so happens that it is this year, and it's very convenient to just say, well, everyone's on the beach, so that's why. Yeah. I don't know. I think right now, in the absence of anything newsy, and given what we have ahead of us, you're just seeing asset flows into stocks, out of bonds, and that's okay.
Real quick on Europe, guys. Do we have any solutions? What's it going to take to get Europe out of this funk?
Maria, I think what it's going to take is to have policymakers really take on a...
But what are they going to do? Are they going to come up with a program to keep rates in Spain below 7%? I mean, is that even feasible?
It's time. They're going to pick the least bad option. There is no solution.
Maria, I think if somehow the European Central Bank is a little bit more aggressive, I think that will certainly convince markets that they're moving in the right direction.
All right, Lee, final word here.
You know, I think there's great news in August. We've got the Chicago Fed Activity Index beating the June numbers. We got industrial production up. And Apple aside, look at the sectors. Industrials and consumer discretionary are still trending higher. So I think there's more to the market than just Apple computer. I think there's catalyst to go higher right now.
We'll leave it there. We'll be watching. And, of course, I hope you come back soon to talk about it. Gentlemen, thank you very much. We'll see you soon.